We're half an hour away from the open of Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David Ingles.
Good morning. Our top stories today: stocks across the Asia Pacific catching the strong tailwind out of Wall Street. The tech-driven rally there, of course, ahead of the U.S. inflation reports. Now, China's financial regulator cracking down on short selling and high-frequency trades to shore up these ailing stock markets. Also ahead here in shows, President Biden and his advisors are meeting with Senate Democrats as more party voices question his decision to stay in the White House race. Plus, also coming up, our exclusive with the CEO of the Chinese EV maker Leapmotor preparing to go global after striking a deal with Stellantis. Good morning, and yeah, we are 2 days, of course, going into the weekend. We're coming off a rate decision out of the Bank of Korea. More on that in a moment here. A focus, though, is really on this Chinese market, which, against the backdrop of the global rally and this one losing pace, again, diverging fortunes here. So I think we're down 4 straight days on the Hang Seng Index, give or take. We'll unpack some of these announcements around short selling in a moment here out of the CSRC earnings guidance. So I think yesterday or 2 days ago, over 300 companies came out with their prelim first half numbers. Not as much last night, but certainly some big names coming through as well. In terms of some sectors to watch going into the open today, Apple, of course, and the guidance coming through there. Looking to sell 10% more phones this year compared to last year. So the suppliers in focus, and obviously given the chip rally, related story in some ways. NVIDIA's close again to its all-time high. We're seeing some of the chip makers in Japan and Korea leading the charge. We're about 2% away from all-time highs on Samsung Electronics. And, of course, we are still in the window here for credit numbers coming through, so we could get that as early as today.
Yep, and this risk-on rally seems to continue here in the Asia-Pacific today. You take a look at how market action is looking like, and you basically are seeing some decent, pretty sizable gains when it comes to Japan, Korea. There you go. AXS 200, Taipei just opening up here. We're seeing a 1% pop here. We talked about that Apple story. We'll check on those suppliers in just a moment here. We've been watching, of course, what's been going on. We thought that U.S. hit another record. We hit 5,600 for the first time ever, and the dollar basically was flat. Really a lot came to what we heard from the BOE chief economist, Hugh Pill. He was talking a little bit more about, it's really uncertain the timing of this rate cut for the BOE. So basically those odds for a BOE cut in August are now lower than 50%. Sterling is stronger, and we punched that 128 level here this morning. Treasuries were mostly speaking, heading into this U.S. CPI later on today, mostly more on the bullish side of things here, that maybe we're going to see those two back-to-back lowest prints basically since August. The estimate is for 0.2%, I believe, for core inflation. So certainly there was also a pretty good bond auction in the 10-year as well. So that's certainly keeping Treasuries supported here this morning. We're basically flat in the Asia session. We're seeing some decent gains in iron ore as well as oil. You flip the boards, and we're watching, of course, the supply chain of Apple. So we've talked about Apple reaching those highs for the stock after that scoop from our team talking about how their guidance really of 10% more new iPhones that they could be shipping this year. So that's certainly seeing a mixed picture across some of these Taiwanese Apple suppliers, likes of Honhai, though, is up some 2%. Pegatron heading the opposite direction. The setup for China, though, is this, though. Might be a bit of a divergent story, just given how bad sentiment has been of late here. Oh, there you go. We're still seeing some gains in futures here this morning. We're punching about a third of 1% to the upside. 2.26 for your Chinese 10-year yield, and a 7.29 handle for dollar China.
Yeah. Now, certainly on the back of the backdrop of the easing expectations around the Fed, Yvonne was talking about how, the inflation print coming out in a couple of hours out of America might do further to bolster that narrative. We heard more from the Fed Chair Jay Powell on Capitol Hill, of course, telling lawmakers the Fed has indeed made progress on inflation.
I have some confidence, as I said earlier, that we are on a downward path. I think if you look at the data, it's pretty clear but we have not said, though, that we have sufficient confidence, and that will be a decision that our committee makes.
Yeah, maybe a step or two closer, but certainly not committing to anything bold or concrete at this point in time. We'll see what the inflation numbers look like, though. That's enough, though, to really push this rally even further globally. Global bull market, I mean, India's pretty much at a record high. Taiwan, we've been talking about Japan. Singapore's actually about 5% from a new 17-year high. On your screens that's a 14-day RSI, MSCI all country, blue momentum on the way up, perhaps even signs of being overbought. The opposite, though, is true for China. MSCI China is going the opposite way as far as momentum goes. So we've either been stuck in a range or we've been hitting, retracing a lot further on the onshore market. CSI 300, 8 weeks of losses so far.
Yep, let's bring in Kinder Lau, Chief China Equity Strategist at Goldman Sachs. You just came out from a tour around the western part of the world, talking to investors for feedback about this market. What are they saying overall? Because it seems like we've really started to see this rally falter. Is this really a repeat of maybe this reopening rally that proved to be short-lived?
Right. So as you mentioned, we've met with investors not only in the US and Europe, but also in China. So I think the quite consistent feedback, or put it this way, if you take a step back, after market rallying 32% from the lows in late January to the highs in mid-May, now obviously the market has corrected about 10%. I think there are two really kind of main investor concerns that have contributed to that correction. Number one is policy. Number two is U.S. politics, right? So on policy, I think most investors that we have spoken with, they're somewhat disappointed with the policy intensity and follow-through after the April Politburo meeting, right? Obviously, at the meeting, the policy tone regarding the housing market shift, right? But after that, obviously, the authorities have taken some measures, but I think investors are expecting more given the continued weakness in the housing market where new home sales are still down 40% year on year for the first half. So I think there's a little bit of disconnection or a little bit of gaps out there regarding investors' expectation on policy and what's been delivered so far. And on top of that, second main concern, obviously, not surprisingly, is a U.S. election.
Yeah.
November?
It's only like a few months away. And I think very much consistent with the betting market's implied probability and the latest polls, I think it seems to suggest that former President Trump would likely win the election if the election were to be held today. Right? If that's the case, I think investors are clearly concerned about the potential escalation of trade frictions for China. And if you look at Chinese exports, which have been a very important contributor to growth so far this year, could be under somewhat pressure.
Yeah. Do you think that keeps investors away largely? So let's, we can look at policy separately, but we know that the election is almost like a brick wall that's 5 months away. In other words, at best, is this a cyclical trade? When you look at the Chinese market, within that time frame, of course.
Yeah, I think, of course, given the U.S. election and the uncertainty about policies and Chinese exports and things like that, I think we have to reassess, right, the situation as we approach these events. But at least on a tactical, short-term trading basis, our view is very clear. I think the market set up going into the July Plenum as well as the Politburo meetings looks pretty compelling for a number of reasons. A, given the corrections, valuations have retraced to about 9 times forward earnings, and we're just about 10% above where we were in late January when sentiment was poor and policy put option was less forceful than where we are now. Yeah. On top of that, I think we've seen some earnings improvement. For MSCI China, in May, we had the first month of upward earnings revisions over the past 1 year. So it sort of gives us some hope that we are moving towards the tail end of the downward earnings revision cycle. And importantly, from a positioning standpoint, over the past 2 months, whether it's hedge funds or long-only investors, they have reduced the exposures to Chinese equities. And now the notional exposures to China basically have gone back to the lows from a historical standpoint. Last but not least, I think investors' expectations going into the July policy meetings, I think, are very conservative.
But you're more hopeful. Why?
Relative to a very low expectation, we are a little bit more hopeful. And I think the reason is very simple. If the government is serious in terms of growing the economy by about 5%, just by doing the backward deduction and back of the envelope calculation, we think we need more policy support from the government. So I think from a sort of timing standpoint, I think the July meetings would be a window for policymakers to step up the policy easing intensity.
What about short-term measures to, I'm hesitant to use the word stabilize the market because it's not like this market is falling off a cliff, but to put a floor underneath this decline in prices. So whether that's these short selling measures or this increased volumes you're seeing in some of the ETFs, for example, do you think, well, number one, do you think there is enough evidence that state funds are again in this market, number one? And number two, do you think the short selling measures will work?
I would say the so-called national team, based on our trackers, they definitely have turned more proactive, more active in the equity market by directly intervening equity prices. So we have a so-called national team tracker, which suggests that so far this year, the national team has deployed more than 200 billion RMB in the Asia markets to stabilize prices there. On top of that, as you said, David, I think just overnight we had the news that short selling ban, and I think in the short term, that should be a boost to sentiment.
You mentioned about this protracted earnings down cycle. Maybe we're near the end of it. Are you seeing more signs of it? We just saw 300 companies come out with prelim earnings, and most of these sectors are still talking about first half losses here right now.
Yeah, I think so. The numbers that I just mentioned in May, we had the first monthly upward earnings revisions for the aggregate market. But if you really go into the details, the upward or earnings upgrade was mainly driven by one sector, which is TMT. Yeah. Yes, tech, TMT. And I think fundamentally the big players, the internet giants, are doing well, right? Given the recovery from a top-line standpoint and stabilizing margins. But if you look at other sectors, particularly those that are more related to the housing market, I think they're still under significant pressures. So I think the earnings picture is a little bit more, diverse or a little bit more nuanced.
Yeah.
More on the upcoming. It's a busy July, as you point out, right? We have the third plenum with the Politburo. Should our expectations be this low?
I think, as we argued, I think investors' expectations are too conservative, in our view. And that's why, given where we are on the valuation cycle, given where we are on the positioning cycle, we think that the near-term risk-reward looks a little bit compounding. But of course, after going through these meetings, we have to reassess the situation about U.S.-China and the earnings trend going forward.
The changes at how the PBOC is conducting monetary policy, right? They're fine-tuning some of the tools. Not so much on what they're trying to do, but do you think this is setting us up for a more aggressive next few months of policy easing from China in that case? As an equity strategist, how do you view the policy potency moving forward, I guess?
Now, our baseline view is still that the PBOC will continue to remain quite accommodative in terms of the financial conditions. We're still expecting more rate cuts to be delivered. We're expecting another triple cut to be delivered in the third quarter. Now, I think all the new policy fine-tuning that we have received so far, the intention is good. Right, you want to reduce speculation in the long end of the curve, and then you try to reduce the short end rates. I think net should be conducive to the economy and should be positive to the equity market.
Okay, what's the strategy then? I mean, leading up to next week, July, the like, is it still stick to the winners like tech? I know you have a note on small caps too that just came out recently.
Let me say a few things, Yvonne. Number one, at the market level, we think Hong Kong, offshore market, we do a little bit better than given where we are on valuations and investors are more underweight. And from a market sensitivity to U.S. rates perspective, I think Hong Kong is more sensitive than A shares, right? So at the market level, we think short term, H will outperform A. Sectorally, we still like TMT. We still like consumer services. Which are in a better position to benefit from the moderate inflation that we're seeing in the service economy. And then thematically, one thing that we've been highlighting for quite some time is the theme of shareholders' return. Right? Given the policy push from the regulators to encourage more companies to do buybacks, to raise dividends, at the same time, valuations are still very attractive. especially against a backdrop where domestic risk-free rates are so low, right? Because you can easily get 5-6% dividend yields from buying some really high-quality assets in China.
Okay.
All right, Kinger, great to have you. Kinger Lau, their Chief China Equity Strategist at Goldman Sachs, still ahead.
25 kilometers per hour speed limit. I'm going to exceed it. Sorry.
Oh, he's such a rebel.
Yeah.
That's Stephen Engle.
I hope he has insurance.
All right, China's Leapmotor revving up its ambitions to go global after sealing that deal with Stellantis. We'll hear exclusively with Steve's conversation with the co-founder and CEO later on this hour.
Ahead of that conversation, President Biden under pressure as more prominent Democrats question his decision to stay in the presidential race. And we are counting down to the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show.
It's up to the president to decide if he is going to run. We're all encouraging him to make that decision because time is running short. I want him to do whatever he decides to do, and that's the way it is. Whatever he decides, we go with.
And that was former U.S. House Speaker Nancy Pelosi speaking to MSNBC. Now, Pelosi's remarks have dealt this fresh blow to President Biden's re-election bid. But another senior Democrat, Senate Majority Leader Chuck Schumer, has reiterated his support for the president following a report that he was actually open to replacing President Biden as the party's candidate. Jill Deeses is with us right now, our news desk editor. She's with us out of Singapore. How do we interpret the comments coming out of Chuck Schumer? Is he open or is he supportive? Because those can be two separate things.
Yeah, David, I think that there's a lot going on here, and it's a very, very quickly shifting situation here. So, I mean, first of all, you've got, these reports out of the news outlet Axios saying that it's Chuck Schumer that's open to the idea of replacing Biden. You have Peter Welch, the Democratic senator from Vermont, actually being the first senator, a sitting senator, to openly say that it's time for Biden to step aside. And then you also have these comments from former House Speaker Nancy Pelosi, which really are not all of that encouraging for Biden right now. I mean, the fact that she's saying that, it's up to him to decide. Look, in Biden's words, Biden has decided. He said that he's made it very clear that he's staying at the top of the ticket. He said in that ABC News interview just last week that, take the Lord Almighty to convince him to step aside. But, just continuing to have comments like Pelosi saying it's up to him, he needs to decide, kind of just is continuing to put that pressure on Biden to make a decision. I think really just here you've got all of this evidence together, all of these mounting concerns together, kind of showing that this pressure campaign on Biden doesn't really seem to be going away.
Yeah, even when it comes to Hollywood with George Clooney, why we put his image up there, he wrote this whole op-ed about the dam being broken and telling really Biden maybe it's time to step down. I mean, what are the Democrats strategizing here at this moment? How can they proceed right now? And is there really time for President Biden to recover ahead of the election?
Yes, well, Yvonne, I think, you see things like that George Clooney op-ed, certainly very flashy there, although I'm not sure that it's, Hollywood donors in particular that are going to be moving the needle here. Maybe it's really comes down more to those sitting Democratic politicians that really have, the power there to pressure Biden more. I mean, look, the Democrats aren't in a fantastic position regardless. I think at this point you're still about, 5 weeks or so out from the Democratic National Convention. It does seem like the options here are Biden either stays at the top of the ticket, and that's the candidate that they ride into the November elections. Of course, he's clearly pulling behind Trump, so not exactly the best position for the Democrats to be in. They could, he could choose to step aside. Maybe, Vice President Kamala Harris steps up to the top of the ticket, or you could have some kind of a scenario in which it's essentially an open convention, and then you've got Democrats sort of battling it out for the top spot. Either way, it's really, I think, a very difficult position for the Democrats to be in at this time. We'll have to see what ultimately unfolds, whether Biden decides to stay or go. But again, we're more than a week out from the debate. Clearly, these pressures are continuing for Biden.
Jill, thank you. Jill Dees is there, our news desk editor, joining us out of Singapore here this morning. In the pre-market, we're taking a look at how things are going. Looks like they're joining in on this risk-on rally here in Asia and really tracking what we saw with the S&P, the tech shares and the like here. There you go. Hang Seng up 0.9%. Futures are punching higher here this morning, and we got plenty more ahead. This is Bloomberg.
All right, welcome back. So the risk rally is bleeding into this equity market in Hong Kong. We were down past 4 days in a row. It's looking like we'll be snapping out of that meandering direction lower here. Set to join the global rally, up 1%, led by tech. Now, earnings, a couple of names to tell you about, out with some prelim guidance for the first half. And, of course, in a couple of weeks, we'll be moving into the actual numbers themselves. Great Wall, as you can see, let's just call it 400% pop in profit. Chang'an Auto seeing the opposite, a drop in profits there to about, let's say, about 60% there. Some finite numbers from China Shipbuilding and China Life, of course, in the form of premium year to date. We're looking at about 500 billion renminbi. And these are some of the stocks, of course, we'll be tracking going into the opening bell today.
Yep, we're watching analyst actions as well, focusing a little bit on the consumer as well as the tech space. Nongfu Spring, H shares cut to underperform at Macquarie. Bilibili, H shares raised to a buy at BOC International with a price target of 156. And XD, this is the game maker in China, cut to a sell at Goldman. They're saying online game stock, basically rich valuations right now, the lack of upcoming big titles as well is the reason behind that move here as well. In Stocks in Focus, we talked about those earnings that came out. Here's how the reaction is so far in the pre-market. It looks like we're still seeing some decent green, despite maybe some of these earnings that did disappoint. Chang'an, I believe shipbuilding was one that did disappoint. But Great Wall Motor, that was some pretty good numbers there. There you go. We're seeing a pop of 4%. And we're watching, of course, these Apple suppliers in China as well, listed here in Hong Kong, the likes of AAC Tech, Sunny Optical, the like there. There you go. So liking the fact that Apple did possibly, according to our sources, guide up, looking to ship 10% more new iPhones, following what's been a pretty bumpy last year.
Right. I'm just going through. So obviously that's helping. That's not helping just what's happening in Hong Kong, right? So we're looking at some of the suppliers in Taiwan. When you talk about the chip story is also permeating across the region, across markets. So big chip makers in Japan, Murata's up substantially as well. That is, of course, the Apple story. Samsung, we talked about this within 2% of all-time highs. So a couple of markets like Taiwan have been doing extremely well. TSMC was up last we checked over 1% again. South Korea is at about 2.5. Do we have a look, please, at the Asia session? Please can we get that up if we can? And as we go into the open today, this bull market is extending into the Asia Pacific, as you can see on your screens. We'll unpack this BOK rate decision for you in a moment, plus the open. This is the China Show.
Welcome back. You're watching the China Show. The bulls in control as we head into that U.S. CPI print later on here today. And maybe this data could suggest that we're getting more confidence that the first rate cut from the Fed could happen as early as September. That's really what pricing is doing here right now. And that's really helping basically equities stay afloat. In fact, extending this global rally that we've seen here in Asia that continues here today. The Hang Seng is up 0.9% as well. And regionally, we're doing pretty well leading up to that big print here in just a few hours, Dave.
Yeah, and hopefully that print comes in, well within expectations. No nasty surprises, given, I think, when you look at the range of forecasts, there doesn't seem to be a lot of give. And assuming, of course, it comes in much lower, do expect, of course, bulls to borrow Yvonne's point, bulls on parade. There we go. Okay, 0.6 to 1% to the upside. Just keep in mind, of course, we're looking at volumes and turnover more closely today, given the fact that you have two pieces of news, right? CSRC and short selling, number one, and number two has really been this global rally ex-China that's taking place. So as far as volumes go, flip the boards, please, and have a look at the open in Hong Kong. The turnover on mainland China has come in at least Monday, Tuesday, and I think even Wednesday, I've yet to check the Wednesday numbers, have come in near or at the lowest levels of the year. as far as the Hong Kong markets go, trading volumes have been about 25% lighter than usual, but I think that's a story that we can put aside for now because as you can see, it's mostly green on your screens. We're led by tech, 1.4% to the upside. Baba's doing about 1.4% there, bottom of your screens. We talked about earnings very, very quickly. So we had a couple of big names coming out with some first half guidance coming through. Chongqing, Chang'an, up 2%, despite the fact that the guidance is for a drop in profits. This one's actually quite the opposite. Very good in terms of the guidance coming through out of Great Wall, about 7/10 of 1%. Baidu had a phenomenal day in markets the last 2 days or so. We're up 4/10, so extending it a little bit. And of course, the Apple story, which we'll talk more about in a couple of minutes here. AAC Tech, one of the big supplies-related company there to the Apple story, up about 4%. Right, big picture is this, right? Global markets have been on this extended bull run, and that's showing up in many markets in the region. Japan, India, Korea, we talked about Taiwan. But it's really come at the expense of a market that was rallying up until about 7 weeks ago, and it's certainly pulled back as far as leadership is concerned. You're looking at market momentum, MSCI China red, MSCI All Country Index blue, 14-day RSI. Momentum's been picking up globally. We've been losing out as far as the MSCI China is concerned. We're going into possibly some potency next week, Yvonne, with, of course, the third plenum and, of course, also the Politburo meeting, and we'll see what we get, really.
Yeah, as Kendra Law from Goldman did say, right, the fact that, expectations are low to conservative right now, maybe this sets us up for something that's a bit of a tactical risk reward around this plenum. If we get any sort of surprises, maybe we could see these markets wake up just a little bit as well. But we're talking about in terms of what we're expecting, yeah, they were pretty more hopeful about the policy put really on these markets compared to what the market is interpreting it here right now. And a lot of it has to do with not just what we're expecting in terms of policy and stimulus, but really the capital market reform that we've seen of late. And we saw a little bit more of an indication of that just yesterday with the CSRC tightening rules on short selling and high frequency trading to crack down on what it calls improper arbitrage. Our China correspondent Min Lo joins us now with more. So walk us through these new rules and how effective are they going to be?
Yes, so the CSRC has now approved stock exchanges to increase the margin requirements in short selling. So now investors are required to put down 100% deposit equivalent to the value of the securities you're trying to borrow. That's up from the current 80%. And private funds participating in stock lending will need to put in a margin requirement of 120%, up from the current 100%. And in the meantime, China's largest stock lending provider is going to suspend its stock lending to brokerages starting from July 11th. So this is likely to lift market sentiment in the short term. China has had a history of stepping in to limit short selling during periods of market volatility, and looks like this is one of those times just to prevent that downward spiral in the stock market. We're seeing that CSI 300 perhaps on track for 8 straight weeks of losses, and the new regulator chairman Wu Qing has shown himself to be quite forceful in implementing some of these measures to stabilize the market.
Yeah, so that's one set of new measures. The other one pertains to program trading, or quants, as they say. What do we know about the new rules there?
Yeah, we don't have a lot of details of that yet, but the CSRC says that it is going to guide stock markets, stock exchanges, to implement possible new monitoring standards as soon as possible. And they're looking at delineating red lines when it comes to abnormal trading. And they're also going to consider charges on additional traffic, on high-frequency trades, and they'll work with their Hong Kong counterpart as well to find ways or mechanisms for investors to report their program trades through that northbound stock link. So what this would do is it's likely to reduce the scale of the long-short strategies that investors take, and also reduce excess returns as well. And again, the CSRC says this is all to ensure a safe and orderly development of the stock market, and they said markets need strengthened daily supervision, and they're going to crack down on illegal activities.
Min, thank you so much. Min Lo, our China correspondent there. More on this central bank decision that came out, well, the rate decision out of Bank of Korea. The statement is barely 2 pages, but all you need is a single line to catch the market's attention here. The Bank of Korea has now said, after keeping rates on hold for a sustained period of time, it is now considering rate cut timing while assessing still, of course, the inflation trajectory moving forward. Fairly more balanced assessment now instead of more hawkish stance.
Yep, they said South Korea inflation expected to continue a slowing trend here as well. So they think core CPI to be consistent with their May forecast of 2.2%. So certainly this is sort of echoing what we heard from the RBNZ yesterday, that they are starting to at least lay the groundwork for when they could actually implement those cuts as well. So they're at least considering, they're talking about the time frame right now. You see the won there reacting a little bit, but still seeing some strength here this morning when it comes to that currency. Of course, we're going to have that press briefing happening at the top of the hour as well. We've been checking, of course, this whole Apple story, just given what we heard from how they're guiding, or possibly guiding this year to look like when it comes to iPhone shipments. That 10% number certainly did move Apple stock overnight, and we're seeing some of these key Apple suppliers like TSMC, Sunny Optical at AAC, really liking that news here so far. And yeah, let's see what this all means, right? So the numbers are saying this, right? Aiming at least 90 million of its latest iPhones in the second half of this year, and really counting on AI to fuel demand for its new lineup after a rocky 2023. Debbie Wu leads our North Asia tech team and joins us now with her story and this scoop. Debbie, it's interesting that they mentioned this, right? So how encouraging is this number, first and foremost?
So this is pretty positive for Apple and its suppliers in the sense that Apple did encounter a bumpy year in China in 2023, and then that happened as Huawei made an unexpected comeback with a advanced processor powering its Mate 60 Pro handset. So it wasn't an easy year for Apple in terms of sales. And then we saw that during Apple's earnings calls at the beginning of this year, indicating that it might face some headwinds in China. But then again, we are seeing that gradually with a flurry of discounts at the beginning of later in 2024, in April, May, Apple's iPhone sales gradually picked up in China. And then now we are hearing that as Apple unveiled its AI tools, so the so-called Apple Intelligence, it does seem to appear more confident in growing demand for its new handsets coming out later this year, because it's going to gradually integrate its AI tools into its software.
Right. And Debbie, I was going to get to that. How important do you think it is that the iPhone 16 will be all it's made to be, for example, and the AI features? Are we on track for that September launch? And what more can you tell us about what Apple, to your point, is telling its suppliers ahead of that as they gear up in terms of inventory and production?
So the number, like you just said, is about 10% higher than the 2023 level when Apple was still on iPhone 15 and then did not have AI tools to offer yet. And then our own Mark Gurman has reported that the Apple Intelligence features will not be immediately rolled out completely this year, but some of the features will be gradually rolled out. It's sort of like the whole launch of the Apple Intelligence suite will only be fully available maybe next year. But still, I mean, that means that there will be new features that Apple users can try to experiment with when new iPhone launches this autumn. So I think that is what Apple is banking on, that users will be curious and interested in getting a new iPhone as soon as they launch, and then check out the latest AI feature that also comes with OpenAI's ChatGPT.
You mentioned the sore spot, which is China sales. Debbie, I'm just wondering, given that people are anticipating these AI features, how do you think the company is really going to comply with some of the AI policies in Beijing?
Right. So right now, because OpenAI's ChatGPT is not available in China, OpenAI does not support the service in the country. So that means Apple has to find a local partner who will work with. So it could be Baidu or some of the China's up-and-coming AI startups. But we don't have a good indication yet that how Apple is going to finalize its AI rollout plans in China. So I guess we just have to wait and see what plans Apple comes up with eventually.
All right, Debbie, thank you. Debbie Wu there with that scoop on Apple. That's moving markets here this morning. Coming up the next hour, we're going to have more analysis on, of course, the sales outlook for Apple with IDC. We're also discussing Samsung's continuing bet when it comes to foldable phones. Kiranjeet Kaur joining us in the next hour. Plenty more ahead. This is Bloomberg.
Two allies states very clearly that China is a decisive enabler of Russia's illegal war against Ukraine. We represent 50% of the world economy together, and it's first time that all NATO allies states this so clearly in an agreed document.
Jens Stoltenberg there, the NATO Secretary General, talking about China's support for Russia as the alliance's three-day summit in Washington. Of course, and NATO's strongest ever language could be coming, and calling out China amid signs that Beijing is developing an attack drone for Russia to use in the conflict with Ukraine. Let's bring in Bloomberg's East Asia Governor Editor, John Herskovits, joining us from Tokyo. John, it's interesting. Can you tell us a bit more about what we are likely to hear and see in this communique?
Yeah, in the language that the Secretary General laid out, this decisive enabler for China with regard to itself for Russia, that's what we're likely to see in the communique. And it's, as he said, this is some of the strongest language that's ever come from the group directed towards China. And it's a statement of concern from the NATO members of China's, what they see as China's supplying materials, dual purpose things that can be used, civilian use that have defense purposes, to Russia to help with the war, and the reporting that we've seen about this possible attack drone. So there is concern. Usually China's in the background at these meetings. This time it's making it to the forefront with this language, which is much stronger than what we've ever seen before.
John, I need to ask you too about how the Biden conversation and the upcoming race played out at these external meetings to emphasize that point, because publicly they obviously were won, but we do understand, based on what we know in our reporting, that privately some of these delegations have started to meet with groups that have links to Donald Trump in the event that becomes, of course, the outcome.
Exactly. We've heard that EU representatives, NATO members, people affiliated with NATO, have been reaching out to people formerly with the Trump camp, who may be a part of a new Trump administration if one were to come in, and also with prominent Republicans in Congress, trying to get a feel for what's going on, because Trump has been quite explicit about his disdain for NATO, threatening to withdraw the U.S. from the group, and this has raised concerns what may happen if he were to return to the White House in January. The group in and of itself got a really strong speech from Biden at the start, talking about the importance of the alliance, standing strong, resolute against authoritarian regimes like in Russia. But you have this, on the one hand, this strong support for the Biden and the way that he's taken it, and also this concern about what may happen if there were a change of administrations in January. So there's what we see in front of us and also behind the scenes. Both are coming into play at this NATO summit.
John Herskovits there, our East Asia government editor in Tokyo for us. Here are some other geopolitical stories that we are following at this point in time. So the Biden White House will apply new tariffs to steel and also aluminum shipments diverted through Mexico. That's in a bid, of course, to prevent China from getting around the existing levies. The White House is looking to head off what it fears could be a flood of steel and also aluminum products from oversupply over in China. Now, Israel is telling all Palestinians in Gaza City to leave immediately as fighting intensifies in what used to be the enclave's most populous area. The Israeli military dropped leaflets on the city telling residents to move south. Now, Gaza City was home to about, 1 million people before the war erupted back in October. It was the first place Israeli troops targeted in their ground offensive.
Well, coming up on the China Show, how Chinese EV maker Leapmotor is preparing to go global after striking a deal with Stellantis. We're going to take an inside look next. This is Bloomberg. Welcome back to the China Show. Let's talk about Chinese EV maker Leapmotor now. Maybe less well known than its competitors, but it is counting on a potentially transformational deal with Stellantis to give it a global foothold. Our chief North Asia correspondent Stephen Engle got an exclusive look at Leapmotor's facilities and spoke with the founder, Zhu Jiangming.
Chinese EV upstart Leapmotor is pretty upbeat, despite not even cracking the top 10 in domestic EV sales this year through May. Sales picked up in June, but so have industry headwinds, from prolonged weak demand and a bruising price war to trade barriers going up overseas. So how does Leapmotor, dare I say, make the leap? Leapmotor likes to think of its DNA as being rooted in electronics. In fact, 60% of all the components in these cars are made in-house, including all of the electronics except for the individual battery cells. In fact, the head of the motor and gearbox division is a software engineer. Leapmotor founder Zhu Jiangming is confident their electrical expertise will eventually set the 9-year-old but still unprofitable Leapmotor apart, while also driving down costs.
The change in China will happen very fast, maybe even about 3 years. The market of battery electric vehicles plus hybrid models will account for 90% of the total sales. It widens the gap between China and the world in the transition to EVs.
Leapmotor's flagship EV is the C10 SUV, packed with advanced driver assistance technology and a starting price of about $19,000, one-third cheaper than the basic Tesla Model Y in China. Trade partners like the U.S. and Europe say industrial overcapacity, state subsidies, and in some cases, ties to the Chinese government give Chinese EV makers unfair trade advantages. Zhu, by the way, also founded Chinese surveillance camera maker Dahua Technology, which is sanctioned by the U.S. for its alleged ties to China's state security apparatus. Zhu is adamant that Leapmotor and Dahua are separate entities. Nevertheless, 1 in 5 of all vehicles made in China were for export in the first quarter, a trend that's rising.
We indeed have received government support, but our contribution to local tax revenue is little, as we have not yet made a profit. Our sales are also limited. It's not like what the West has imagined.
The risk is that jobs, industries in our home countries, the United States, Germany, France, Japan even, start to melt away as this juggernaut called China just overwhelms markets because it's lower cost, higher quality, and more efficient. That's where we are, and it has boardrooms worldwide really nervous about the potential for this outcome from China.
And that's where Stellantis comes in. The Chrysler and Fiat owner in October signed a $1.6 billion partnership deal for a 21% stake in Leapmotor. Stellantis gets access to Leapmotor's EV tech and cost controls, while Leapmotor gets, well, a production entry point into Europe. All right, this is the subcompact hatchback T03 from Leapmotor, and this will be the first model that will roll off with the partner Stellantis. So many Europeans might have their first exposure to Leapmotor with this little guy for a $7,000 car. That's the entry price in China. European pricing is not yet set.
Indeed. If the EU or other places in the world raise tariffs on EVs and impose more restrictive measures, it may have an impact on the globalization of Chinese EVs.
And yet, Zhu says they'll open showrooms and start sales in at least 9 European countries and 3 other regions by the end of the year, allowing Leapmotor to perhaps avoid some of the obstacles other Chinese EV makers may face. Stephen Engle, Bloomberg News, Hangzhou, China.
Yeah, there we go with, don't know what to say to that. Cute car, though.
It's cute.
Compact, right?
Yeah.
All you need in a compact city. What was the speed limit? 25 kilometers per hour. Markets are moving quicker than that, though. We're up about 1% on most of these benchmarks right now. CSI 300 has actually picked up. So the bounce we're seeing today is coming through with heavy volumes. Some of the big winners on your screens, materials, healthcare, and industrials are up about 1% each. It's really about lasting power of this rally, so we're looking at that, and of course turnover as well. But broadly speaking, it's good across your screens here.
Yeah, there is a little sense of a sea of green. If you exclude what we're seeing in sovereign bond markets here in Asia, but for the most part, you're seeing risk assets like stocks are doing very well. And we're seeing basically, let's look at Taiwan, we're up 1.3%. Japan's up some 1%. Hong Kong's doing very well. Dollar is pretty much flat, so that's giving some room for some of these Asian currencies to gain as well. We're watching that Korean won very closely. Interesting enough, you're actually seeing the market react a little bit kind of differently to what we're hearing from the Bank of Korea statement, talking about they're considering the timing of rate cuts now. Maybe we're going to see, if we're hearing a little bit more from the governor on just how dovish she really is in that press briefing that's going to happen in just a few minutes now. But overall, you're seeing Asia FX do quite well. Bond markets are selling off just a little bit here in Asia, but you continue to see some movement to the upside when it comes to crude this morning, and we're hovering around the 85 level for Brent. We'll have a lot more on the way in the next hour. You're watching The China Show. Welcome back to the second hour of the China Show. Here's a look at the CSI 300 a half hour into the session here right now. It looks like we've seen strong volumes a lot in terms of these sectors that are driving those gains here right now. The material side of things is certainly one of the big leaders on the board here this morning, and really kind of following this global risk rally that we're seeing when it comes to stocks. The dollar's pretty much flat. That's certainly helping the sentiment overall here this morning. And it's really the tech sort of play that's driving all of this after what we saw with some of these chip makers. The Apple story that really led to these new highs for that stock, and that's really helping these Apple suppliers in this part of the world. Take a look at what we're seeing. So we're getting a little bit more traction here on some of these Chinese, Apple suppliers like Sunny Opticals up some 7% here right now. AAC also up some 6%. So certainly that guidance of shipping close to, or if not 10% more, new iPhones certainly is encouraging for the market here today, just given how bad things were last year as well. And we're watching, of course, all things Asia ex China. We're just about a few hours away from that U.S. CPI inflation print. So certainly that's going to be the next event risk. But really, the bulls are in control. You take a look at how stocks are doing here right now. Bonds are not moving too much, but we are seeing some yield pickup in Australia and in parts of Asia here today. But overall, it seems like the setup to that inflation print is still looking pretty positive here, that maybe we will see a pretty decent print to keep everything rally going, Dave. Yeah, and just looking at the forecast there, right? So it's, certainly the direction of travel is clear. I think we're looking at, well, depending on the metric is, right? So when you look at headline year and year, this is what you're getting. And as far as the forecasts go, we're looking at about 3.1%. As you go down, you go month and month, you go super core, for example, is actually now negative as of May. Core is 0.2%. Core, I think, is about 0.1%. Let's bring in Garfield Reynolds here to talk us through the rate implications of this. He leads our Markets Live Asia coverage. Garfield, the market has, and we've already heard from several Fed officials, and I'm wondering, I guess my question is, what hasn't been priced in based on all we obsess over this every single day. I'm wondering, is there a number out there that even surprises us tonight?
This is a tough one. Obviously there's a number that it surprises us, and that's an upside surprise, because nobody is really expecting this. Well, not nobody, but the consensus, both when it comes to economists and also very much in the market. Like the market, there was a story out earlier talking about the idea that basically about 55% of the market is positioned for a bullish result from CPI. 29% is kind of not so sure, and then the remainder is like seeing something that's bearish. So, the obvious risk then is that something's bearish, because the market is very much not set up for that. So that would be the surprise, right. And it would be a surprise also because the data has been trending towards disinflation. We had Lisa Cook's from the Fed talking about disinflation. So that would be the thing that would upset the apple cart.
Another thing that could, right? I mean, it seems like this inflation print may not have as much importance this time around because you're also dealing with something politically in the U.S., which is the uncertainty around who's going to be actually running as the Democratic presidential nominee and the uncertainty around whether President Biden's going to drop out or not. I mean, are we starting to see political risk being priced into these markets too, Garfield?
Well, not exactly. I mean, the biggest single impact of what's gone on with Joe Biden's potential candidacy is that it's focused the market's attention more strongly on the really poor deficit outlook. Like whether Trump ends up back in the White House, whether it's Joe Biden, whether it's anybody else, it is clear that the U.S. is going to go on running big deficits, that's going to remain a concern about oversupply of government bonds. There's also, there are inflationary policies from both sides of the political aisle. So the simple fact that we are now paying more attention to the political race than we expected to, that's helping to keep that front and center, and that's why, at times the bond market has maybe looked a little bit reluctant to rally too hard, because that concern is, closer to the back of the mind than it would have been. The other thing we have to keep an eye on here is that so far the overwhelming direct impact of Biden's struggles has been to increase the odds of a Trump presidency. We saw some strong moves when that initial shift in expectations occurred. Since then, Biden's chances of becoming the Democratic nominee in the betting markets anyway have gone up and down. Trump's odds of becoming president have stayed stronger, somewhere between 57 and 62%, depending on which markets you look at. So unless you see a notable shift in those Trump odds off the back of whatever's going on in the Democrats or whatever else, the markets are probably going to say we can pretty much look through all this. Yes, focus a little bit more on the chances for more bonds to be sold, because those deficits are not going to shrink; they're going to increase. And we've already done, our game playing for what a second Trump presidency might mean. Otherwise, let's not try to trade political risk at the moment. That's not our main skill set. And as I said, as long as the situation is this is favoring Trump, he's now seen as more likely, there's no major shift in that perception, well, then there's no real reason to rush to price in something different.
Garfield, final one for you. Closer to where we are, and this hour, the Bank of Korea is set to hold its press briefing following the rate decision. They've planted the seed, Garfield, of a rate cut sooner rather than later. How dovish do you think they will sound at this briefing?
Well, it looks like they will sound perhaps a little bit more dovish than had been the expectation, going in. Then again, they did also talk about needing to stay restrictive for some time. So it's a very fine balance that they're probably trying to strike, much as we have seen from Jay Powell overnight, from RBNZ Governor Orr yesterday. So it was really only yesterday. The markets move so fast these days. The Korean bond bulls are likely, probably at the end of the day, to end up a little bit disappointed, precisely because, as I mentioned, Powell was very measured in what he's talking about. And waiting for the Fed is very much, I think, what Asian central bankers are almost obliged to do by what's been going on in the currency markets. So unless you get a strong signal from the Fed that rate cuts are coming sooner rather than later, you're likely to get Bank of Korea and other central banks saying the same sort of thing.
Garfield, thank you. Garfield Reynolds, who leads our Markets Live Asia coverage there. Just ahead here on the China show, we'll be talking about, of course, the Samsung and Apple story, and IDC perfect guest to help us unpack really what the outlook looks like for smartphones here. You have the latest product releases, of course, out of Samsung. You have this ongoing strike. Is there an impact to production there? So lots to get into with Kiranjeet Kaur in a couple of minutes. This is Bloomberg.
If the government is serious in terms of growing the economy by about 5%, just by doing the backward deduction and back of the envelope calculation, we think we need more policy support from the government. So I think from a sort of timing standpoint, I think the July meetings would be a window for policymakers to step up the policy easing intensity.
Goldman Sachs' chief China equity strategist Kinder Lau there speaking to us a little bit earlier on about what he expects from the third plenum next week as well, and more really on the plenum now and what we're expecting. Bloomberg Economics thinks that policymakers convening in Beijing next week have the firepower to end China's housing crisis, but whether they actually pull that trigger on big bang stimulus is certainly another question. Let's bring in economist David Chu. He's with us here about, tell us a little bit more. It seems like the chances of some sort of Fed-level QE are pretty low, but what impact could it actually have on the housing market?
Well, if the PBOC does what the Fed did during the crisis, it means that the money provided by the PBOC can buy, after leveraged, it can buy about 70% of the inventory in the market. But still, if it do it.
Right. But that's the same as someone asking me, if I train to run the 100-meter dash, could I make it into the Olympics? And the answer is no, right? So what are realistic expectations to have?
Well, we think that a much lower...
lower the bar for us.
Yeah, it should be easier. But still, the thing is that our analysis is focusing on what the PBOC should do and what it can do. But we are not decision makers, so we cannot say they are going to do it. Because we think that the PBOC's policy makers are trying to balance a lot of things. Right. Not only the housing market, but also the exchange rate and also the potential asset price bubble it can trigger if they do it. So that, we as an analyst, we just do the stories one side.
So what are the possible scenarios?
Yeah, it's possible, but we don't say it's will happen.
But what more could they do? I'm just saying, the PBOC. You've laid out, I think, 3 possible paths. What could they be?
If we have 3 scenarios. One is for the PBOC to repeat what they did for the Sentinel renovation, which means the PBOC gives 3.6 trillion yuan to banks to leverage totally 6 trillion yuan lending. That is the first scenario. And then we think that the PBOC can repeat what the ECB did during the euro debt crisis. And then going to the very extreme case, the PBOC can do what the Fed did during the GFC. So these are the 3 scenarios. And but of course, it has costs. Right, every way has its costs.
Yeah, the cost of doing nothing also has a cost, right?
Yes.
Yeah, right? The alternative too. So, talk to us about we keep talking about how, quantitative easing, that the PBOC needs to deploy its balance sheet somehow, whether that's in the housing market or in the bond market. How does it? And you mentioned contradictory objectives. How does it do that when it's also trying to limit the downside in bond yields?
Yes. Well, I think the downside of the bond yields is of hot discussion over the past several weeks. And the people had a reason that the PBOC want to prevent the potential depreciation of the yuan via limiting the downside of the long end bond yield. But to be honest, we think that this is only one of the points in the PBOC's consideration. We also think that the PBOC wants to avoid risk accumulation, which is similar to the SVB case. in the bond market. And also, the PBOC want to avoid the repeat of what happened during June of 2013 when the liquidity, the money market encountered the liquidity crunch. So I think that is the why. Well, we don't think the PBOC want to tight, but they just want to do more work to prevent potential risk accumulation.
David, thank you. David Chu there, our Bloomberg economist, on what to expect out of the plenum and certainly scenarios that we could maybe track here next week. We're also looking at some live pictures out of Seoul here with the BOK Governor Ri following that central bank decision today to keep rates unchanged. But then again, there was some interesting language in that statement, right? That, you know, they're mulling, they're considering the timing of the rate cut while assessing CPI. That was the key sort of headline that we saw. But I think the market's not really buying it here right now. We're actually seeing some strength coming through in the Korean won, a bit of sell-off when it comes to Korean bonds here this morning, perhaps because there was this one line that they're going to keep restrictive stance for a sufficient period of time. So they're still kind of leaning a bit hawkish here. Maybe rates might have to stay where they are, but at least they're considering a time frame on when to lower borrowing costs.
Yeah, we're not as close to the rate cut as some of the Dubs might want to hear looking at that specific headline. Of course, now if you want to dig deeper into this for our Bloomberg clients, you can continue to listen into Governor Ri, of course, there, and he just outlined right now that the decision was still a unanimous one. So it's not as if we're at a point where you're getting some dissent in that direction for a rate cut. So you can find other stuff, of course, on LiveGo. Other diary entries, big stuff that's coming up today and later this week. Of course, on top of this, we're also pushing into this U.S. inflation conversation in a couple of hours. Right, just ahead here in shows, we're talking about HSBC. It's looking to look more like some of its peers, revamp parts of its investment bank with a new CEO on the way shortly. The full story of that just ahead. This is Bloomberg. Welcome back. You're watching the China Show. Let's talk about this HSBC story. It's looking in the mirror and maybe looking to change the way it looks, I guess, a part of it. We're talking about the investment bank here in a move that will actually make it look more like some of its rivals, like Citi, for example. Let's bring in Manuel Baigori, our deals reporter, who's here with us. So what's the plan and why now?
David, I mean, it's a major revamp in the investment banking business. We think HSBC, you know, as any other big bank, they're trying to organize themselves and adapt to this new reality of weak deal making and, you know, potential drop in interest rates in the horizon. So, you know, they are making adjustments. I mean, HSBC, along with others, right, they are kind of like trying to see how they come up with the right structure just to be more efficient and kind of like to also, you know, all banks in the industry, really, they've been laying off people left and right, trying to adapt the teams. And I think this is just a move in that direction to see how they can do the same or more with the people that they have and how they should adapt to, again, there is very few deals getting done these days, so it makes sense.
What are the consequences then of this revamp? I mean, are we talking about jobs that could be lost, costs might need to be reined in a bit more?
Yes, Yvonne, I think that's a big question now, right? What the mid to long-term consequences of this. Definitely there will be new reporting lines, and that will affect some people. Short term, not necessarily any job losses, but then as they adapt to this new ecosystem and this new structure, then they will see like which pockets you know, need more adjustment or which other areas are the right sized. So I think it's a little bit too soon to tell. I think for now what they want to do is, okay, let's try to come up with a new structure and be more efficient. And see, you know, how we're doing in terms of employees and number of people, headcount. but whether or not there is layoffs down the road, that remains to be seen. I think it comes down to whether or not we see more deals, right? If there is a rebound in deals, maybe they need more people, right? More headcount to kind of tackle those deals. If deals don't bounce back, and Asia Pacific has been kind of like trailing both the US and Europe, and we need to bear in mind that HSBC has been pivoting towards Asia.
Yeah.
So we need to see that market coming back, definitely.
And we are seeing small signs of that, for example, but not in the way that would change business models again. Any other moves of note?
Well, we've seen HSBC, and we've been covering it very, very, every step of the game. They've been introducing curbs in travel, entertainment, and so on. They've been asking, their investment bankers to do more with less, so to speak. So, yes, I think, short answer, there should be more steps in that direction of how to become more efficient, more linear, more simple structure. And that's, by the way, happening across the board, right? We've seen other major Wall Street banks also trying to come up with new ideas on how to be more simple and nimble. So there should be more steps to come in that direction, and also bear in mind that there should be a new CEO coming on board relatively soon, and I'm sure the new person will have new ideas on how to streamline the business as well.
Okay, Manuel, thank you, Manuel Balgori there, bringing us that scoop on HSBC, our deals reporter. We're just taking back to those live pictures out in Seoul. We're hearing more lines here from the Bank of Korea Governor Lee there, talking a little bit more about, yes, it was a unanimous decision to keep rates on hold, but in terms of division of what the members were thinking about what the next 3 months are going to look like, in fact, you're seeing two that were open to that rate below 3.5% in the next 3 months. The remaining four see that rate unchanged at 3.5%. So at least you're seeing some doves emerge among the board.
Yeah, two out of the six, and of course the governor is the tiebreaker in case they get a 3-3. So they're open to rates below that. Even if they were to say at this point in time they will be voting in favor of a cut, that's not enough actually to get a cut, because of course that's still a minority group. It's worth noting over the next 3 months you have 2 more meetings. Next one is August 22. The one after that is October 11, and then you have one more for the year. So I guess the conversation now goes: will we see a rate cut out of the Bank of Korea this year? 3 remaining meetings. It looks like the door's open, but are they going to walk through it in enough numbers to actually get us there?
All right. And of course, we'll continue to track this press briefing and bring you the latest. But in the meantime, let's get you caught up with what we heard from the Archegos founder, Bill Hwang. He has been found guilty of criminal charges and stemming from his firm's multi-billion-dollar collapse. Bloomberg's Yvonne Quinn has more from the federal court in Manhattan.
Tiger Cub Bill Hwang, founder of Archegos Capital Management, found guilty of a raft of criminal charges in Manhattan today. These pertain to racketeering conspiracy, 2 counts of securities fraud, wire fraud, and several counts of market manipulation in particular stocks such as Viacom, CBS, Discovery, and Tencent. U.S. Attorney Damian Williams in the Southern District of New York said that Hwang intentionally lied to Wall Street banks to try and up the trading capacity of the firm in order to intentionally move the prices of stocks in the portfolio higher, and that this doom loop just continued and continued. The defense, for its part, said it couldn't have been a pump and dump scheme because Hwang never sold a single share. There was no dump. The defense also saying that the wipeout was due to a black swan event, or indeed a week where there was a perfect storm. Now that week came March 22nd of 2021. It was a week where Viacom issued more shares, and the SEC said it was cracking down on some China companies listed in the United States. 2 events very detrimental to Archegos' portfolio. Within hours, margin calls started coming in from various banks, and by Friday, Archegos was no more, and collectively, banks across the street were down $10 billion. Sentencing, which in theory could be up to 200 years, at least for Hwang, but is obviously likely to be a fraction of that, is set for October 28th. Both Hwang and Halligan are likely to appeal. Vonnie Quinn, Bloomberg News.
Right, back to markets right now. So a couple of things moving in the Chinese market about an hour in. So you have, some of the stocks that, had seen high short interest in them are actually moving in the direction of news. As you can see, we're up quite substantially on prices. These are some of the stocks, of course, that did see open interest, as far as short interest, to be more specific. Then, of course, the moves to limit short selling really boosting these names mechanically, if you will, in some cases too. The broader read across these markets is you have this, and then you have this rally taking place, and down to maybe also the same reasons, this put that the CSRC is again putting underneath this market. Small caps are outperforming quite a bit. The CSI 300 was up as much as 1.2%, still on track right now for one of the best days, if not the best day, in 2 months on the regional benchmark there. So we'll see if this holds up as well. Right, there's a trading debut, and fittingly enough, correct name for it too, quite fittingly, 40% higher. It's a game maker. It's in South Korea, $320 million deal. And did the bankers leave money on the table with a move like this? You could argue maybe yes, but secondary market is happy, 40% to the upside. More on this, plus more market stories, including perhaps some breaking news too, still from the Bank of Korea press briefing ahead.
Taking you back to the BOK presser here this morning, and we're hearing a little bit more from the governor of just really what this breakdown and where sentiment is really when the next rate cut could come, or the first rate cut really of this cycle for the BOK. It seems like the market is still thinking that, it might take some time, but you're hearing at least 2 out of the 6 board members were open to a rate cut in the next 3 months or so. But really what Rhea is saying is the market expectation for a rate cut is somewhat excessive here right now. So they're still thinking that elevated rates have also benefited some people, and higher rates have been inevitable to curb these prices. So, yes.
Yeah, it's a balancing act.
It's a balancing act.
Yeah. And yeah, it's worth noting, right? You nailed it on the head. This is a very indebted as far as the household debt is concerned, right? So they have to start thinking about that moving forward. The market's not buying it. There we go. We're stronger on the South Korean won right now. Right, just to pivot to another story we're tracking and some big moves we're seeing across equity markets. Within equity markets, you're looking at chips, you're looking at Apple suppliers too. Separate, but in some ways commingled stories. TSMC is up another 2.4%. Man, this stock can't stop rallying as well. I mean, you had sales numbers too coming out yesterday, right? So that's maybe more an Nvidia story. But then again, of course, commingled is what we went with here earlier on. This Bloomberg scoop that will see strong iPhone shipments in the latter part of this year. Bell is here, of course, our tech reporter, to take us through the details of this. Yeah, what number is Apple working with now, Bell?
Well, they're working with basically a 10% jump on AI shipments compared to earlier devices. They're looking at shipping around 90 million. That's what we're hearing from sources in the latter part of the year. It really speaks to how optimistic it is about its AI capabilities, because Apple, if you recall, was a little bit late into the AI race. But then last month they introduced Apple Intelligence, and so they're basically trying to integrate AI now across the suite of its lineup. That is what they're banking on for better shipments, really. And it comes after what's been a pretty sluggish 2 years for the company, particularly in the Chinese market. So optimistic, and that is why you're seeing those gains today. But yes, as you said, partly down to the TSMC story, those sales numbers we had out yesterday. And given the figures that came out telling us that when we do get the second quarter numbers next week, we're likely to exceed estimates, because you get the monthly sales figures, you can put May, April and June together, and you've already beat what the consensus is from analysts.
Yeah, and let's talk about Samsung too, because they also unveiled some new products, new phones, as well with AI features. How do those stack up?
Yeah, so we had the Galaxy Unpacked event overnight in Paris this year, and really, if you were to have one key takeaway, it's AI. It was AI, AI, AI across the entire product range. They got new watches out, they've got a new ring out, they've got updates to their foldable phones in particular, and all of these are integrating AI across the different ways. One of the more interesting ones, actually, it's pretty cool technology, but with their flip phone, you're going to be able to have this new feature where you can converse in different languages in real time. So you can speak, and then the phone will display the translation for you with the flip to the person who's standing opposite. And then there's the new earbuds, and they'll be able to do it in real time as well. So it's really just the future, basically, that Samsung's bringing here with. But one thing to caveat as well is that they're going to be introducing these AI features on selected products at the end of the year. So
wow,
just a signal of what's to come. Perhaps it's not going to be in all of its lineup.
Yeah. Plus, they have a strike going on as well.
Yeah. Oh, yeah. Sorry, we can mention ongoing strike. Yeah, it's not all sunshine and rainbows.
All right, Annabelle. Thank you, Annabelle Jewellers, there, our Asia Tech correspondent. Let's bring in Kiranjeet Kaur now, Associate Research Director for Mobile Phones Research at IDC. Kiranjeet, it's good to have you. I want to focus on the Apple story first, maybe just given and get your reaction to these numbers. Right, we're talking about 10% more new phones, at least 90 million iPhone 16 devices in the second part of this year. How positive are these numbers, and does it suggest really that these new AI features are really going to spark a new upgrade cycle for Apple?
So this year is all about AI, and Apple last month they announced in their WWDC event that they are going to be launching some AI features in their new iPhones that are slated to be launched later this year. Now, interestingly, most of these AI features, they will only be available from iPhone 15 Pro onwards because of the hardware limitations. So anything before iPhone 15 Pro or even the iPhone 15 base models, they unfortunately would not have access to some of these on-device Gen AI features from Apple. So if consumers really get interested in these Gen AI features that Apple is slated to launch later this year with their iOS 18 launch, it could trigger a strong upgrade or a faster upgrade cycle for the iPhones, and that could eventually result in good growth for iPhones in the second half of this year.
Well, let me ask you simply and directly, 90 million, do you think they'll be able to do that?
I think it's a bit optimistic, but at the same time, we have seen very strong demand for Apple in the emerging markets. They have been growing pretty strongly across Asia, across some of the Eastern Europe and Middle East markets as of LATAM in the last 2 or 3 years. And also in the developed markets, there is a strong premiumization trend, and that's triggering growth for some of the higher end models for Apple. So with the trade-in schemes that Apple has been introducing in more and more markets with more affordable financing plans that people have access to now, if Apple is able to convert that into an upgrade cycle for the new iPhones, especially when they come with the new Gen AI features, I won't say it's too off the mark.
Can you tell us what your outlook is for China sales for Apple? I mean, obviously this has been the sore spot for the company. They've been dealing with this competition with Huawei. I mean, do you think that competition has subsided a bit now? And obviously there's still a lot of questions on how they're going to roll out some of these AI features in the mainland.
Yes, so China is still going to be a challenging spot for Apple, particularly because Huawei has come back really strong in the China market, and it's gained a very strong position in China market. And even other Chinese vendors, including Oppo and Honor, they are doing pretty well. And as we look at some of the other form factors, such as foldables in the China market, where Apple is not playing at, those are the ones that are seeing very strong growth in China. And as Apple rolls out some of these AI features later this year, I think we'll have to wait and see how it kind of finds its way through the regulatory challenges that some of these AI companies are facing in the China market. So I think it's not yet out of the woods in China.
Let's pivot now to, but it's the same story, obviously. We're looking at Samsung and, their bets putting forward. We just talked about, I'm not sure if you caught the conversation we had with our tech reporter, Annabelle. They've outlined their bets on foldables as well, and, some pretty cool features. Do you have projections for how Samsung do you think will do this half?
So I think there are two things. One, outside of the China market, Samsung is the clear leader in the foldables smartphone segment. And also they have launched their AI features earlier this year in their Galaxy S24 series, and it has done pretty well. So we've seen the shipment numbers for Galaxy S24. Those were much higher compared to, the S23 series last year. So the AI features are definitely re-stimulating the market. So as some of these AI features or actually more of these AI features come into their foldable smartphones, that could again, trigger more interest in the foldables, which had started to wane a little bit as we'd seen in the past couple of months. So together, being in a dominant position outside China, as well as having AI-packed foldable phones, and a lot of these AI features are customized to take advantage of the foldable screen, so that should bode well for Samsung.
Yeah, what do you think is we're going to see the most competition for Samsung? Is it going to be Apple and these new AI features, or other Android players in the space?
I think it's at both ends. So from Apple, obviously at the higher end of the market, in the premium price segments, there is going to be, a divided interest from the consumers as they look at the Galaxy AI features versus Apple Intelligence. And also, as we see a lot of growth coming from the emerging markets now, and a lot of that is coming from the Chinese vendors, which had really slowed down last year. But we see players like Xiaomi, Realme, Transsion, they are coming back up really strong in the emerging markets, and that's where it kind of gives strong competition to Samsung in the lower end and the mid-range price segments, where these emerging markets are really, most of their smartphone shipments are concentrated in those price bands.
Kiranjeet, just to pivot to another business of Samsung, which is arguably, of course, the bigger one, which is semiconductors and chips. So they're releasing in a couple of weeks, well, they released the prelim profit numbers for the entire company, I think, last week. What do you think the breakdown is going to look like? What are you looking out for as far as the chip business is concerned? And also the outlook given HBM, for example, and the outlook and perhaps the NVIDIA story going into the Samsung story.
So overall, if you look at their projections for earnings for Q2, it's been pretty strong. And a lot of this is coming on the back of strong growth in the AI segment, whether it's coming from the data centers or it's coming from the devices. So the outlook for the industry overall and for Samsung specifically, it is pretty strong for rest of the years, coming on back of strong demand for chips in the particularly created due to the demand in AI segment, and that in turn kind of translates into strong demand for their high value added chips, whether it's HBM or it's SSD5 or DDR5.
Kiranjeet, very quickly, this ongoing strike, problem, no problem?
So far, it doesn't look like a big problem, but if it escalates and extends into other plants, particularly those manufacturing, the more high value-added chips, such as we talked about, the HBM, then it could trigger into a bigger problem for Samsung. But so far, it looks like it's well contained.
Kiranjeet Kaur, Associate Research Director there for Mobile Phones Research at IDC. Now, just back to the Chinese equity markets, rallying quite, relatively speaking, of course, to what's really been a very soft 7-8 weeks or so. We're up 1% on the CSRC 300. Shanghai Comp, as you can see, is 0.8 of 1%. At one point, we were up 1.2%. Small caps are outperforming, so if all things stay the way they are, we could be set for the first positive week in 8 weeks, with about a day and a half left, of course, of trading left. So we'll see what the road ahead looks like for this market. Still ahead, and also talking about what the road ahead looks like, here's something you do not want to miss.
25 kilometers per hour speed limit. I'm going to exceed it. Sorry. So acceleration is...
Okay, let's hope he does. It doesn't look like he is just yet. The Leapmotor conversation with Stephen Engle revving up its ambitions to go global after a potentially transformational deal with Stellantis. Exclusive conversation with the co-founder and CEO is just ahead. This is Bloomberg.
It has a range of about 400 kilometers. This is a pure EV. It does not have a range extender. But again, this is supposed to be just a...
Chinese EV maker Leapmotor is aiming to take its products global after striking a deal with Stellantis. Now, the tie-up is exploring the assembly and sales of several Leapmotor vehicles, including the T03 compact hatchback. Our Chief North Asia correspondent, Stephen Engle, took one for a test drive.
All right, this is the subcompact hatchback T03 from Leapmotor, and this will be the first model that will roll off with the partner Stellantis. So many Europeans might have their first exposure to Leapmotor with this little guy. Now we need to see how this thing drives for a $7,000 US car. That's the entry-level price. $7,000 for a brand new EV. Let's see how it goes. 25 kilometers per hour speed limit. I'm gonna exceed it, sorry. So acceleration is not great, but it's not sluggish. It's just not as quick as some of the more high-end EVs where it could be upwards of 2 to 3 seconds, 0 to 60 miles per hour, or 0 to 100 kilometers per hour. Okay, not bad, not bad, not great, but not bad. It has a range of about 400 kilometers. This is a pure EV. It does not have a range extender. But again, this is supposed to be just a urban car in dense urban areas. So this is the benefit that Leapmotor will get really initially from the Stellantis partnership that they signed last year in 2023, and that is essentially to get production in Europe at a time when, of course, the EU is considering EV tariffs, so they can produce at the Stellantis factories in the European market.
Yeah, and Steve, by the way, also spoke exclusively with the chair and the CEO behind, of course, the car Leapmotor, Zhu Jiangmin, about EV price wars, the impact of tariffs, and also taking on a company like Tesla.
In China, we think the price war may last about another 3 to 4 years. Overseas, I think it may take another 5 to 10 years for new energy vehicles to replace fuel vehicles. There are timetables for the United States and Europe by 2035, but I think it may happen faster. When new energy vehicles become popular around the world, the market shares will be more stable. Only then will the price war stop.
Now, Tesla recently got approval to develop its full self-driving FSD here in the China market. Analysts I've spoken to in the United States say that's a game changer for Tesla. But would you say the technology here in ADAS and the other self-driving or driving assistance software in Leapmotor and other products is already advanced to the point where FSD's arrival in this market does not pose a significant threat, or does it pose a significant threat?
As for intelligent driving, Tesla is indeed a pioneer, but everyone is beginning to get closer. Many users in China may know what its functions are and how its performance is. But Chinese car companies may have 3 to 6 months to catch up and become homogeneous with it. Because in terms of overall investment and adaptability to China's road conditions, Chinese car companies have a better understanding of the needs of Chinese users and the needs of China's road conditions.
We all know a key component of your future plans is your partnership with Stellantis. Obviously, they make Chryslers, Fiats, Peugeot, Maserati even. That gives a lot of importance to your export ambitions. I believe this car behind me, the T3, is coming off the assembly lines in Poland as we speak right now. But there are tariffs, obviously, in the EU, upwards of 48%. In the United States, there are tariffs of upwards of 100%. Canada is now talking about tariffs as well on Chinese EVs. How has this changed your export strategy?
It is true that we and Stellantis plan to assemble the entire knockdown parts of Leapmotor T03 in the early stage. We conducted a trial run of a production line and a trial assembly. We will also launch stores and start sales in 9 countries in Europe and 3 other regions around the world in September and by year-end. I think this practice will allow us to move faster than some other Chinese car firms. Indeed, if the EU or other places in the world raise tariffs on EV and impose more restrictive measures, it may have impacts on the globalization of Chinese EVs. But if we look at it from a long-term perspective, this may not mean that it will hinder some progress in the world, whether it is carbon neutrality or the globalization of new energy vehicles. We think this general direction will not change, especially in China. Everyone has seen that in May, this has reached a level of 45 to 48%, and the market share has exceeded 52% in the past 2 weeks. So we think that in the future, the change in China will happen very fast. maybe even in about 3 years. The market of battery electric vehicles plus hybrid models will account for 90% of the total sales. It widens the gap between China and the world on the transition to EVs.
Leapmotor CEO Zhu Jiangming there with our chief North Asia correspondent, Stephen Engle. Now, if you are a Bloomberg subscriber, you can catch up with all of our interviews by using our interactive function, TV Go. You can join the conversation, send us instant messages. As Dave said, slide into our DMs or IBs.
You have our permission.
During our live shows. Check it out at TV Go. This is Bloomberg. Here's a look at your China brief, a look at what's making headlines in national newspapers. New CSRC regulations are dominating coverage in today's financial papers, the Securities Journal, with a front page report on rules for securities lending as part of short selling restrictions. Now, that story notes progress in securities lending regulations since 2023 and says the new measures will help prevent risk and maintain market stability. The paper is also delving deeper into rules for quantitative trading, saying they reflect authorities' emphasis on investor rights and institutional fairness. But it also cautions against banning quants completely, calling them an inevitable product of technological advances and capital market development.
Meanwhile, the front page of the Communist Party's official mouthpiece is all about President Xi Jinping's meetings with leaders from developing countries. As you can see here on the front page, she is shown shaking hands with the Prime Minister of Bangladesh and also the President of Guinea-Bissau. China is also, by the way, hosting leaders and officials this week from the likes of Thailand, Belarus, Vanuatu, and also the Solomon Islands. State media has framed it as a busy summer diplomacy season, saying it shows China's openness and developing countries' resistance to what it calls U.S. hegemony.
Now, staying with geopolitics, Chinese state media is stepping up the rhetoric against NATO. A Global Times editorial says the group's globalization can only accelerate its failure and that it cannot hide its true nature as a, quote, war machine. Bloomberg has learned that NATO leaders are set to issue a communique with their strongest ever language calling out China's military support for Russia. So that's what's really kind of making headlines in Chinese media here this morning. But again, for markets and what's really top of mind is going to be that U.S. inflation print in just a few hours or so. Can it actually, what number, what's the magic number that's going to keep this everything rally going?
-10. Well, the range of forecasts on month-on-month core, I think it's 0.5 to about, right? 0.3. And I think Garfield, our colleague earlier, made a very good observation that markets have very high expectations of a dovish print.
Yes.
So there's very little sort of, or at least lesser room for disappointment here. So the risk is really that this comes in and, we get a hawkish backing up, of course, of yield. So, but it depends what we'll see. I think 0.2% is the median survey for month-on-month core.
Yeah. And that's why you're seeing equity markets don't seem phased at all about this print leading up to it, right? You're seeing stocks are up, bonds are also up.
Implied vol is down.
Tech is up. So certainly you're starting to see signs that maybe, this disinflation sort of trend may resume, or it has resumed already. You take a look at how the market is looking at here right now. We're focusing, of course, on what really drove this market. It's the tech space, it's the chip space here this morning.
Yeah, and this is really what has allowed the market to also, to your point, ignore the lack of progress on inflation a few months ago and why the market is where it is right now, going into a point where inflation is also starting to now come in along with expectations. So you have two strong tailwinds here, and of course in the region here, you have SK Hynix shares are up also too. On the back of this revised outlook coming out of HANA, there's the Apple story and perhaps more iPhones coming through there as well. And of course, you're going into earnings season where expectations are quite high, especially for that very narrow group of extremely large mega cap stocks in the United States. From extremely big to extremely small, CSI 2000, CSI 1000, the small caps are leading this rally onshore. The CSI 300 is coming off incrementally its highs of the day. We're still up 0.7%, but the CSI 2000, as you can see, up about 2.5% there in the early going. So, we'll see if this market continues. That is it from us here on the China Show. Bloomberg Markets Asia is just ahead. Thanks for joining us today. See you tomorrow. This is Bloomberg.